The popularity of short-term rental properties was driven by digital platforms such as Airbnb and Booking.com, making it easier for landlords to list their properties but also to manage it along the way. And of course, this attracted tourists from all over the world looking for unique homes, flexibility, but also just a cheap alternative to hotels. And of course, the pandemic accelerated this trend. However, recent news suggests that the boom of Airbnb but also short-term rental may be over, with occupancy levels significantly dropping according to the report. In addition to the shift in this market, the new government's proposed restrictions in the use of short-term rental properties continues to add pressure on landlords. In this video, I'm going to explain to you what makes short-term holiday lets so attractive to landlords, the current state of the short-term rental market, but also how these regulations are impacting property investors. Stay tuned. This segment of the rental market is attractive to landlords for many reasons, but the rental income it brings in, it's got to be the biggest one. I mean, if you look at the short-term rental, charging per night, even per week, in comparison to charging per month for a 12-month fixed contract, it's just going to be higher, especially during those peak holiday seasons, such as summer, Christmas, Easter, and everything in between. And it just gives more flexibility and control to owners. I mean, imagine just being able to adjust the price, having availability according to demand, but also a mix personal with business use, and just being able to have more control over the income. All of these are great to have, but what about those property investors that were forced into the short let to make those numbers work for them? And during the pandemic, in cities like London, a lot of those long-term tenants just left the city. I mean, this was literally like a ghost town. And of course, there were no rush to come back. However, landlords were left with vacant properties. What did happen during that period, once the lockdown was over, was that the staycation became very popular. And landlords started to explore this option and ultimately liked it because of the income that came in, never went back to the long-term rental market. And then you have the removal of the mortgage interest relief. So the government came in and removed the ability of landlords being able to deduct their interest rates from their taxable income. A typical story involves a landlord like Jim, who owns 3 buy-to-let properties in London. Now initially, his buy-to-let properties were fine. However, when the mortgage rate started to change and started to double and even triple, and this is in addition to not being able to deduct those mortgage interests, he was in trouble. And after looking for alternatives, the only solution that didn't involve having to sell or even lose his property investments was going into the short-term rental properties. Let's break down these figures for Jim. So previously on a long let, he was earning around about £25,000 on a 1-bed property. Now this is rental income, and yet after the agent fees he was left with around about £22,000. However, after shifting from a long let to a short let, that income was £65,000, and this is on a 90% occupancy rate. Now of course his Jim doesn't get to keep all of this money. Let's put in there £10,000 of portals and then another £10,000 of agent fees. Ultimately, he's going to be left with around about £45,000. Bring it down to £40,000 after taking into consideration the bills and everything else he has to pay. Now compare that to £25,000 of a long let. Of course, there's a considerable difference, and they are numbers that are just far too attractive to ignore. If you're finding this video helpful, smash that like button. It really motivates me to continue to shoot more of these videos for you. So what exactly is happening in the short-term rental market when it comes to occupancy rates? Well, according to a report and looking at 10 different regions from London all the way up to Edinburgh, according to this report, occupancy rates have dropped significantly. In fact, the figures show that there is over 500,000 active listings, with over 50,000 of those being in London alone. And this is an increase from 22% from last year. Looking at regions such as Manchester, Peak District, Lake District, and even Cotswolds, all of these regions have increased by double digits. Somerset, Dorset, Devon and Cornwall have also seen an increase. However, if we look at Edinburgh, where there is now a Scotland-wide registration scheme for landlords that have short lets, have actually decreased by 12%. It seems like landlords are just running away from property investments from Scotland. And this is of course due to the excessive regulation that we're seeing. The question is, are we going to see these type of regulations in England? If you are a landlord watching this video, I'm always curious about your thoughts. Leave me a comment below. As a result, those annual revenues for those short-let landlords have been weak over the last year. Some of these regions down by up to 7%. However, the market always corrects itself. And in fact, what we've seen is a sharp increase in all of these 10 regions, with Edinburgh seeing the highest at 18%. And if we dive in deep to the data of what's happening in the capital of the short-term rental, there's a report that suggests, and some neighbourhoods with the highest decline are central London. Supply issues are affecting areas of both central and greater London. Now these are the 10 neighbourhoods with the highest decline compared to pre-COVID levels. And as you can see, Whitechapel, which is pretty much the city, is down by 50%. Those are big numbers. And yet, let's not lose sight of that the landlords that are on a short-term rental have seen an increase in their daily rate of approximately £150 to up to £250. This is an increase of around about 67% in these areas. The fact that there are more regulations in the rental market to come from Labour absolutely means you should hit that subscribe button so you could keep up to date. This leads us into government intervention and their plans to abolish the furnished holiday lettings from next year 2025. Now of course what this is going to do is level up the tax treatment between long lets and short-term rentals. New proposed regulations are going to require planning permission for new short-term rentals. This is moving more towards giving control to local authorities so they can actually control the number of short lets within their borough. This is a move from central government giving more powers to the council and just a simple devolution. We may see the same landlord registration for short-term rentals that we've seen in our northern neighbours up in Edinburgh, which had an impact of course, and we can see a 12% drop in those short-term rental availability. According to the government, these interventions are absolutely necessary to balance out the supply for the long-term rental properties. But it's always great to see that they're looking at other solutions such as building 1.5 million properties across 5 years. If you are a landlord and you're not sure whether short-term rental is the right option for you, book a video call with me. There's a link on the description. And wrapping all of this up, demand is down, supply is up, but those daily rates are also up. And the market always finds a way to correct itself. Now, am I seeing those short-term rental landlords running? No, I'm not. The numbers still make sense. There is a point in the market where it's saturated, but all markets do. All booms come to an end. It just means that those landlords who are running a smooth operations are going to continue to provide quality accommodation and be able to achieve those higher daily rates. And those other landlords will just be pushed out of the market. And moving forward, it's clear that the sector is going to continue to evolve, with landlords and all these other stakeholders having to balance out the advantages of these short-term rentals and all the benefit it brings, because it's not only for landlords but also the communities, the retail, the economy, and being able to balance that out with continue to provide long-term housing for the community.